Summer is over, but is Calgary's real estate run? It's Darren Langell once again back with another Calgary and area market update. Today, we're going to be highlighting what you need to know about the months of August. So let's get to it. Okay, at this point, if you have followed our updates over the course of the last 3 months, we've been discussing the shift that is starting to happen in our market. We've taken the time to express things like this. Well, number one, Alberta being positioned really well in relation to the rest of our country to weather these interest rate changes. We've also outlined that we have just come from the bottom after a long, pitiful run in housing prices. So we really can't be added to the conversation to do with bubble or crash. We've got nowhere to crash. And because of all of this, people and profits are moving to our province with no slowdown in sight. So I'm not going to talk about any of that. You know what? The news is the same, so let's move on to what I really feel are the most important things I can comment on from our recent set of data. So today, we will talk about pricing, payments, and projections. Now, I could talk to you about the amount of new sales that just happened. It's basically the same as we had last August and still in line with one of the highest recorded Augusts of all time, but I won't bore you. I could talk to you about our inventory. It's basically at an all-time low, and we are listing even less than we have recently, further keeping it tight. But that story is like a broken record too, so I won't. So let's skip all of this and focus on pricing. With all the talk about interest rate bumps and possible future increases, the majority of our conversation, well, it's centered around the actual benchmark prices and what will happen to them as a result of all of this. I can tell you one thing first. We have dropped. Now I did a little calculation, and as a whole, we are down 2.6% from our peak in May, from 546,000 to 532. So yeah, across the 2,136 sales in the month, the price slid down just a wee bit. For further context, this is basically the amount on average that we negotiate off on a given listing price. So it's not a lot at all. Now, secondly, in terms of pricing, I did another calculation for you. We remain 7.4% up from January. That's just 8 months ago, which equates to $36,500 for the average home. That's a lot of money. That's a $4,500 increase per month this year. And then third, our pricing remains up 11% from this exact time last year. Now that's a whopping $52,800, or a gain of $150 per day for the entire year. All I can say is, well, yippee-ki-yay. Now this story continues to be the case across all districts, all price ranges, all surrounding areas, to a varying degree. Year over year, we're all winning no matter what real estate you own. If you need specific info to your property type and price range, just simply reach out to us, as it's really a hyper-specific answer you'll need to make that executive decision in your life. Okay, that's enough about pricing for the moment. Let's now start talking about payments. Now, I wanted to talk about this because I wanted to shed some light on the phrase, don't wait to buy real estate, but buy real estate and wait. I'm sure you've heard this one before. Well, during our little run-up in February through May, lots of people focused on the rising sales prices and thought they should maybe sit on the fences and wait a little bit, and thus ignoring this history-proven truth. Things like this were being said, it's bubble, the prices will crash, I'm just gonna wait, or I don't want to compete on a home, no sense overpaying, and so on. Now let me paint out the real world scenario, people that did that. Scenario number one, bought a home at the peak, March to May, somewhere in there. Average payment for somebody put 5% down would be about $1,180 bi-weekly. Now scenario two, bought a home now after prices have quote unquote crashed. Average payment for 5% down would go up to about $1,430 bi-weekly. Wait, what? How could this be more? Well, it's no secret that interest rates have risen, and in our case, a whole 2%. This rise in rates is far worse for the buyer than the slightly higher price they would have had to pay. Now, to make this even more clear, I could have added $100,000 to the average sale price, and the bi-weekly payments would still be less than they are now. Did we know rates would jump to this much? Well, no, but the writing was on the wall. There were some increases coming. Did we know prices would basically hold? Well, yeah, we did. if you are here in Alberta, there was absolutely no economic fundamentals in our province that would point to a true crash. It was all the headline talk, but it was centered around those national news, not ours. I tried to share this. Again, back to the quote, don't wait to buy real estate and wait. Let's continue painting this picture. Scenario 1 again, over the 5-year term, you'd pay $91,000 in principal pay down on your home. It's a lot. And then scenario 2 now, well, you'll pay down $76,000 in principal over the 5 years. It's kind of close, but it's still 15% less or $15K. But furthermore, scenario 1, over 5 years, you would have paid only $62,000 in interest. Now scenario 2, you will pay $107,000. This is a whopping 72% increase or $45,000 more in interest. Ouch. I share all this as a present day, real world scenario for everybody listening. It is very rare, and history has proven it time and time again, that it doesn't pay to wait versus buying now. It literally never happens unless you are looking at a very short, say 1 to 2 year timeline to enter and exit the market. So yes, the saying remains true. Looking long term, always buy real estate and wait. Don't sit on the sidelines hoping for a better time. Okay, I think you get my point. So let's finish now with the third P, projections. What is going to happen now? I would challenge you off the backs of my second point of the day. Well, does it really even matter? If you are interested to own real estate now and into the future, it will remain a positive thing to do when your outlook is long enough. But further to that, there are a few things I am expecting to see that I wanted to share. We will see slight month-over-month declines from now through spring. I believe as a whole, we could see another 2 to 5% easing before we commence the next spring market. Now this will be different for every price point and property type once again. Most, if not all, will be likely felt in the detached market. As affordability continues to be a driver, more people will find more affordable options like semi-detached, row homes, and apartments. And this is exactly what August data shows. The semi and row home markets is very tight right now. You won't see much in the way of deals at all. So much so that the sales to new listings ratio has actually increased throughout the month, which simply means the amount of sales relative to new listings is going up. As well, seasonally right now, we will see less and less new properties come to the market on the back half of the year. But this is happening while our sales are still, remember I said this, at near record high. These two things coupled together will keep condos, rows, and semis in a seller's market. Now the comeback of the condo remains in full swing. Year over year, sales are up 58%, and this trend will likely continue. Watch this market continue to tighten as we proceed to Christmas. So I expect our greater Calgary market to continue its strength. We have a lot of economically positive things going on, and we have a supply-demand equation that continues to stoke the fire. I'm also predicting one thing. Regardless of what happens with the September rate hike or future rate hikes that the feds may cook up, the lenders are going to start getting creative. If there are, less deals out there for the banks to get, they're going to be forced to get competitive with each other, and you'll see products and temporary rate games being played to get your business. Banks, they need to lend money to make money. So they're going to find a way, and we're going to benefit. Okay, that's it once again. The 3 Ps: pricing, payments, and predictions. Thanks again for watching. Don't forget to subscribe if you haven't already, and then please share this with as many people as you can that you think would find value in it. See you again next month.